So it's hard to predict an exact failure rate when it comes to artificial intelligence-based startups. There will be a failure rate, and it will be high, but most industry viewers, including myself, believe in the fundamental transformative power of artificial intelligence. We, over the next 5 or 10 or 15 years, will see world transformative companies. We will also see transformations of business models, not dissimilar to the way that the mobile revolution swept the world in the late 2000s and in the early 2010s.
Okay, so you're equally excited here. Let's broaden this out and talk a little bit more about the private market industry, because when it comes to private equity, I mean, 2024 was going to be the year when the GPs exited their investments, returned money to their investors, to LPs. LPs then re-upped their ammo a little bit. Hasn't quite happened to the full extent that everyone was hoping for. So is that going to come in 25?
You know, it's our belief that it will. These things are remarkably hard to predict. I heard a fund manager a few days ago say glibly that 2025 is the new 2024.
Is it? Okay.
So, I mean, that encapsulates the view that there will be a lot of exits in 2025 and 2026. A lot of it, quite frankly, will be driven by the end-of-life phenomenon. Many of these underlying fund managers, which are 10 years in duration, are reaching their end of life. So there will be exits next year, the year after, and the year after that as well.
And what is driven by that? You say the end of life, but also the lower interest rates.
Correct.
We're in this sort of Goldilocks scenario. It should be very much conducive to deal making, right?
And we've seen that. You know, since the Fed cut rates, we've seen a pickup in deal flow. We've seen a pickup in the regular way M&A market as well. That started towards the tail end of the summer, certainly heading into the autumn, and we expect that to accelerate over the course of the winter, heading into next year as well.
Mm-hmm. In the meantime, as we've seen very much a slowdown when it comes to deal making on the PE side, we've seen the surge in secondaries. We saw that 2023. It's continued into this year. Is it still going to be a story of 25 if you say deal making and actual exits will pick up next year?
You know, don't forget, the secondaries world is still small. Despite the meteoric growth in secondaries, it is still small when compared to the overall size of the private equity market. Just to throw some numbers at you.
Sure.
Secondary deal flow this year should hit around $140 billion or so. That sounds like a big number, and it's certainly large to where it was 5 or 10 years ago, but it's dwarfed by the size of the overall private markets industry. According to some estimates, there are more than $3 or $4 trillion still locked in buyout managers' portfolios alone. So while we've seen a large increase in secondaries, and I think we will continue to see an even larger increase in secondaries next year and the year after that, it is still small when compared to the overall size of the private equity universe.